Hey, you guys. Uh, Long time no talk. It's February 13th, 2024, and uh, some people in the Discord were mentioning that they liked the videos and this and that, and I stopped doing them just because they got really repetitive, and I guess that's a good thing because that means, there's a process to this, and the process is repetitive, it's boring, and it's consistent, and it is what it is. Um, I thought instead of making a daily video where I'm going over what levels I'm looking at, of where I'm going to be bullish or bearish or this or that, I thought it might actually be more useful, and maybe I'll learn something as well in the process, to instead take a higher time frame view of things, not just in how I'm looking at the market day to day, but more so in what these videos could be, taking a more general, more conceptual, uh, larger outlook approach to how I'm looking at these markets. Um, there's no script for this. This is free. This is going to just be off the cuff. Maybe today we'll just talk about high time frame concepts. I mean, look at this market. It's gone from 410 to five. Let's call it 100 points. Let's call it a 25% rally or something in what, 3 months or something? Yeah, roughly 23% in 108 days. And it looks like we're having a bit of a shift in behavior now. Let's get into that. Let's talk about large time frames and accumulation, markups, distributions, all sorts of stuff like that. Now, I don't want to show off things that are proprietary, and that's not to me, but proprietary to Mr. Jason Shapiro. So I will just post what he has posted in the past, and one of those being the Dow futures COT positioning. He has an indicator. I'm sure you can buy it. I'm not sure how exactly, but I think he would have it up for sale. Um, this is just a really easy way of seeing what's happening. Okay. Um, I think he didn't post it after that, so we'll keep that closed. But uh, red over here shows the. Let's stretch this out for you guys. Red over here, this is a weekly chart. Red shows where commercials are positioned. Yellow are retail traders, and blue are hedge funds. What you need to know is that usually price will revert in the direction that commercials are trading. So during this time when the Dow was just churning around sideways in this range, hedge funds were getting shorter and shorter, and you can see they were the shortest they've been in, well, looks like ever. and, and the commercials were the longest on paper ever, right? And subsequent to that, we got this humongous rally. I think it rallied something like 35%. Oh no, 20%. But an absolute huge move in the Dow upwards. Um, so that kind of is fundamental to how I'm looking at markets. It all comes down to overall positioning, and this comes from the very high time frame of something like the COT. That gives us an idea of how these big boys are positioned, the commercials, the hedge funds, and as well as retail. Keeping in mind, I think uh, retail isn't like you or me as far as I know. I think it is bigger people like CFAs. Um, I believe. I would have to double check on that. But regardless, I'm looking at positioning. And to me, the market is constantly in a state of who's offside at various time frames, right? Let's go over to the NASDAQ, and this is a really good example. This is a very classic Wyckoff distribution scheme on the NASDAQ, and I've been watching this for, I don't know, maybe a few weeks now. And here is, can I split screen this? Are you guys able to see this if I split screen it? No, unfortunately not. Here you go. Let's open this in a new tab. There you go, the distribution schematic. You guys can still see that. That's great. This is pretty similar. It's simple, actually. You see some sort of uptrending market, right? We're rallying. You see some preliminary supply, just in other words, some sort of seller. You get a buying climax event. That's usually an emotional event, some sort of buying climax. From there, a short covering or a secondary bid, it's not able to get that high, comes back down, breaks that low, shows us a sign of weakness. You get a stop run at the highs, a lot of churn, a secondary stop run, and this is pretty much the highest you want to see the market go. From there on, we should be breaking these swing lows, and that should result in a crap out. Now, let's go over to the S&P over here. You have that sort of right here. Preliminary supply is what I would call this. Do I have this marked up? I do. Preliminary supply would be here at 444, the buying climax event at 460. We come back down. You have this automatic rally, just a lot of churn, and then the crap out subsequently. And now on the NASDAQ, you're getting that as well. Preliminary supply over here, the buying climax event, this automatic rally. Secondary test is a lower high. Weakness below the automatic rally, and then this upthrust and the ultimate upthrust. And I am swing short right now, so we'll see how this concludes in a few weeks, whether I'm stopped out or not. Similarly, this plays out on equities as well. Where's my equities chart here? I think this is it. Disney. This is the chart I've been watching for months, and I am long in the 90s. This is on a weekly time frame. Really, you could probably look at it on a monthly. This is the reverse. Preliminary supply, so some sort of bids show up, it goes down lower. The selling climax event, you get short covering for the automatic rally. Essentially a bunch of tests, some stop runs, churn in this area, and then the final move lower, right? Just like how we had the final, whatever that is, up thrust, something, something. It's the same thing to the downside. You're getting this final spring event, and from there you want to see it really start to make moves upwards like it is. So this is generally how I'm looking at the trading environment. I'm taking this very high time frame perspective, and that starts to give me biases. Some alerts going off at 49.55 is the target today. Um, let's talk about how this now starts to come into a slightly smaller time frame, and I think we'll call it there for today. Let's go over to this is selling really nicely. Let's go over, take off the indicators, and you know what? Let's also just go to a fresh chart here. There we go. Throwing a 30-minute. The market, like I said, it's about positions, who's onside, who's offside, and a lot of that you can get from just drawing out larger time frame balance zones, seeing where the market is balancing around. And balance to me is just a way of saying auctioning, right? Uh, when we came back down, this was a key auction, if you want to call it that. Let's get rid of the extending. There you go. This to me is a key auction. Okay, the auction is held when we went and tested it. Okay, and from there, every prior auction was held. Here's another auction. After this big liquidation day, this is what you'd be looking for in a bullish market. Here's some sort of auction, right? Maybe it's easier if I just extend it out. There you go. The auction's held. Here's another one at the highs. You can call them consolidations, you can call them auctions, you can call it whatever you want, but ultimately it's just a place where the market is bouncing in between. And to me, it's just like any other market, right? If you're selling shoes, if you're selling shoes or cars or whatever, if you have a buyer at $100 and a seller at $150, the market's just hanging out. It's just chilling, auctioning between there. Prices go down a bit, they go up a bit, and every now and again it falls out of this balance and it adjusts. There's our auction, and here it is held over here. And what I noticed yesterday, before this large liquidation event, is that we broke through this auction like it was nothing into the close. After the close, we broke through this auction, 50/40s, to the downside going into the close, and then coming into CPI, we broke through this auction over here. Now we're breaking through this 49.75 to 55 auction, right? So that's how I'm looking at the market in these high time frames. And if you really want to get into the lower time frames, you can start looking at things like let's go to the RTH. You can start looking at things like settlement lows or settlement highs. That's just the lows of 2 days ago, right? So for today, is Tuesday would be looking at Friday's low. So whatever that is over here. Okay, we're well below Friday's low. Well, there were people who were trading and are getting margin calls now that we've gone below 50, 60 and a quarter. Similarly, when we're above settlement highs, so take Friday's high, wherever that is, here, when we're above 48, I'm going to be a little bit hesitant on the short side. And for yesterday, actually, sorry, for Monday, that was Thursday's high, wherever that is, here. So yesterday, on Monday, I took one short. I got my face ripped off. Took a 2.5 point loser. And I'm not overly surprised. When we're above settlement highs like we have been for so long, it's a very easy way of saying, you know what, maybe don't get short. When we're, crapping out well below settlement lows, maybe that's a sign to hold off on the long side. And I think this is going to be a great example as we come into this distributive phase uh, amongst the indices, amongst the market. Uh, a very easy way to get an idea of how people are positioned is, look, are we above settlement highs? Are we below settlement lows? Where are we trading relative to yesterday's open? Where are we trading? Relative to yesterday's close. Here's a really simple way of seeing when to look for a swing short or not, or sorry, a day trade short or not. I took a short on this day right here, 50-50 and quarter. I remember here was my level, 50-50 and quarter, and I got short in the RTH right there, pretty much right off the open. Why? Well, we had this huge run up on Wednesday, whatever this is, 50 points or something, nearly vertical. And then all of Globex, here's the Globex Open, it's unable to trade above the Globex Open. It's unable to trade above the 4 p.m. close, wherever that is, 50.5 or something. Uh, and that's usually a sign of, to me, exhaustion. I think his name's ESF Leo on Twitter. He talked about some market maker stuff, but in general, if you get this huge run up and then there's no continuation the next day above the close, above the Globex Open, above the prior day's high, the RTH high, it's a sign there's exhaustion. Similar to the downside, if you get a day where you have this huge liquidative move, where's a liquidative move into the close? Any of these days? Here we go. This was a great one. A huge liquidative move into the close. Here was the close right there, and low 68.5. Yeah, that was the day we back tested this prior auction over here. Uh, Look what happens after that. Here's your low. Okay, this is after hours to me. Here's your low, 68s. Globex opens at 74s. We spend pretty much the entire night above that Globex Open. All of this trade, all of this overnight is above the Globex Open. All of it is notably above the 4 p.m. close and the 4 p.m. low. And look what happens in the RTH. You get some sort of moneying around, right? Eventually finds a bid, rips upwards. This does not touch the prior day's low at 68s. It gets around there, comes into a level at 75. I think I was actually bid that day somewhere around here. Uh, it comes into this levely area and it rips upwards. So again, it's just a state of auctioning and positioning, and really, I think where people get messed up is they might start to look at too low of a time frame or too high of a time frame. They're looking at time frames that are not extremely relevant to what they're trading. Yeah, we were in a massive uptrend during this time, right? Where is this? We're in a enormous uptrend. We're above settlement highs, all that sort of stuff. But when I see us stalling out here on this, whatever it was, when I hit it, February 8th session, when I see that, I will take my chances on a short. I know that after a huge, expansive session, the next day is probably going to be more of a contraction kind of session. When I see no follow through in Globex, no follow through above the Globex Open, the prior day's close, the prior day's high, any of that sort of stuff, And I know that typically after a big range session, I mean, just like the CPI event today, this is what, a 100-point move? I think 40 was there you go, 40 was the high. There you go, 92 points. I know tomorrow is probably going to be a more contraction kind of session. Um, it's about positioning on multiple time frames. It's about understanding whether we are in a markup phase, a markdown phase, accumulation, distribution, whatever you want to call it, and trading accordingly. Um, so anyway, I hope that ramble, that 13, 15-minute, good God, I hope that 15-minute ramble is a little bit instructive. And if you have any feedback or any ideas on what you'd like to see next, I think we could go into levels and statistics and all sorts of stuff like that. Just drop me a comment or a DM or something. But anyway, that's how I'm looking at these markets. That's how I come to these ideas. Hope that helps. Have a great rest of your afternoon. Don't get liquidated trying to catch a knife on this thing. Uh, Trade safe.